world will never be what I expected.
The stock market lately has been showing critical signs of a crash. Many of these signs appeared in 1929 during the Great Depression. Is it possible we could be entering another Great Depression? This video will show data that suggests the economy could fail again. Not only will data be used, but a financial advisor that participates in the stock market daily will be interviewed to answer questions about what he believes should be done and whether or not we're entering another Great Depression.
What if I wanted to break, laugh it all off in your face? What would you do? What if I fell to the floor, couldn't take this anymore? What would you do?
There are 4 main points on the stock market that affect the economy. These 4 points are the wealth effect, effect on pensions, confidence, and investments. The wealth effect is the impact on the shareholder stocks when the market drops. If investors see their share prices drop, then they will be more hesitant to spend money in the economy. Fortunately, most investors understand the risk of loss in the market and are prepared to invest long term. The stock market can also affect company pension plans. The effect on pensions occurs when the market drops because pension funds invest significant amounts of their funds on the market. If the market were to drop, the value of the funds would drop as well. The consumer's confidence is what stock market crashes are primarily off of. If the consumer feels confident that the money he invests in the market will gain profit, he will invest. But if the consumer feels apprehensive towards the market, he will probably not invest in the market. If share prices were to fall, financial advisors would slow down their investments in the market for their consumers.
All the small things, true care, truth brings. I'll take one lift, your ride, best trip. Always, I know you'll be at my show.
I'm here with Dan Newsom, Senior Vice President of Wachovia Securities. I'd like to ask you a couple questions about the stock market. To start off, what are your views on the stock market today?
Well, we're probably seeing the most difficult stock market that we've seen really since 1929. The market has been more volatile than we have seen probably in the last 20 or 30 years. And clearly, we're in a bear market cycle right now. So we expect that the market's going to continue to be up and down, and the trend is probably going to continue downward.
Now, following up on that question, how do you think the stock market will do in the next, say, 12 to 14 months?
Well, I do think the market will recover. The good news is the Fed, the Federal Reserve, and the government has taken the necessary steps to try to stave off this economic downturn. I think the economy will probably bottom sometime next year, and as a result, the stock market should improve after that.
Now, what precautions do you think economists could have taken to prevent the crash of 2008?
Well, I'm not sure there's anything they could have done to prevent it entirely. I think perhaps policyholders could have, policy administrators in Washington could have done a better job of regulating the securities markets, taking a closer look at the real estate market and what banks were doing in terms of lending money. The real genesis to the stock market crash had to do with the bubble in the real estate market. The real estate market bubbled, the bubble burst, and then you had a real credit crisis among banks and individuals that found themselves heavily leveraged in a position where they were really in bad shape.
And do you believe in the $700 billion bailout?
Well, I think the $700 billion bailout will certainly help. the one thing that the economy needs right now is some confidence. And the money that's being injected into the banking system through the bailout will provide confidence for investors that banks are not going to fail, that they will lend money again, that the consumer will be able to spend again, and quite frankly, the consumer has driven the economy over the last 20 years, and to get the economy going again, the consumer has to gain confidence in the ability to spend money and to know that they can keep their house.
And what acts can be done, this is of course in your opinion, that will recover the market?
Well, I think we're on the right road. The Fed has injected about $350 billion at this point into the banking system. They've injected about $25 billion per institution of the 9 largest banks in the country. That should help restore confidence, so that's step number one. The new administration is talking about a stimulus package somewhere in the $300 to $500 billion range, which will also help the economy. Anytime you're spending money, you're going to create jobs. If you create jobs, you're going to generate more confidence in the overall economic situation.
Oh, let the sun beat down upon my face, stars to fill my dreams. I am a traveler of both time and space, to be where I have been. Sit with elders of the gentle race, this world is seldom seen. Top of days for which they sit and wait, all will be revealed. Talking song from tones of living grace, sounds caress my ear. Not a word I heard could I relate, the story was quite clear. Oh,
It's understood, I said in many ways. Too scared to run, I'm too scared to stay.